What's up YouTube, it's your boy Easy the Man, aka Black Boy Easy. And yeah, welcome to my channel. If you're new here, make sure to subscribe, and also make sure to turn on post notification. And if you like this video, make sure to give it a thumbs up and let's keep the work going. Now if you want me to do anything for you, you can also drop it down in the comment section. Let me know how you feel about this video and probably all my other videos. Now without talking too much, in today's video I'll be teaching you guys, especially the newbie traders, how to do a top-down analysis on your charts, whatever pair you trade. It works for any pair. You can use it on the GBP USD, you can use it on USD card and so on. So if you're a newbie trader and you're finding it hard, or you facing some difficulties in analyzing the market and actually getting profitable trades, watch this video. It's quite simple. I'll just show you guys what to do and what to avoid so you can be profitable in your forex trading. Now there are two things that are very, very important in top-down analysis here, and that is number one, your time frame. Your time frame is very, very important. Why is it important? Because we have different types of traders. For me, I'm a day trader, so the time frames I use will be different from the time frame a scalper uses. Will be different from, and it will be different from the time frame like a swing trader uses. For me, I'm a day trader, so I use the 4-hour time frame, the 1-hour time frame, and the 15-minute time frame. So the 4-hour time frame I use it to determine the main trend, and then the 1 hour I use it to determine the current trend, and the 15 minutes I use that to get my entry points. So yeah, and as a swing trader they use higher time frames, so that's why time frame is very, very important. You have to know what kind of trader you are, and then you have to know the kind of time frame you're supposed to be focusing on. And the second thing that is very, very important in top-down analysis is price action. You have to be very, very good at price action. If you're not good at price action, you just be getting trades that are not 100%. You just get trades that normally you're not supposed to get into, but you get into them and then you end up losing. Now without wasting your time, let's get on the chart and I'll show you guys the way I do my top-down analysis each and every day. When I come on the chart, the first things I do, the first things I look at, and the reasoning behind each and every of my trade. Let's get on the chart. Welcome back, guys. This is my chart and yeah, as you guys can see, this is the 15 minutes. So the first thing I do when I get on chart is I go to the 4 hours time frame right here. Just gonna wait for it to load up. So I go on the 5-hour time frame right here. You can see all these trend lines. This is my analysis. So if you look at it here, you will see, I don't know if you guys know this, being beginners, but we have under chart patterns, we have things that are called, if you guys know it, but under price action we have this, we have wedges and triangles and things like that. So this is a descending wedge, and what I'm waiting for to happen right now is, oh, I just went offline. I think my hotspot just turned off. Excuse me, guys. We're back, guys. So my phone just turned off the hotspot by itself. It does that a lot. I don't know. It's like it's trying to save battery or things like that. So what I was saying is, this is a descending wedge, and what I'm waiting for here to see on this chart is probably price doing this, going back up, right, breaking this zone probably, then retesting this zone and going back up. But that's advanced, so let's not get into that. Let's just leave that for now. So the first thing I do on my 4-hour time frame is I determine the main trend. And if you look back in history, you see that we've been in downtrend. Price has been making lower lows, lower highs, lower lows, lower highs consecutively. But right here, even on the 4-hour time frame, price has been consolidating, right here. This is a consolidation, but we trade consolidation. We can make money from trading consolidation because we're day traders. Okay, so for swing traders, they might not get opportunities, but for us, we're day traders, we get opportunities even when the 4-hour time frame is consolidating. So the first thing I do is, okay, I've determined the main trend. We're in the downtrend, so I go down to the 1 hour. This is exactly what I do. So I go down to the 1 hour, and on the 1 hour, that's where I draw my trend lines. I rarely draw trend lines on the 4 hour because I feel like it's going to take much time for the price to get there. So I draw my trend lines on the 1 hour because it's closer and price will get there. So what I do is, I'm just going to delete all these trend lines right here. I'm going to delete that. I'm going to delete this too. So we're going to draw our trend line from here. First touch. This is the second touch right here. So we're going to extend it like this. Now, if you don't know how to use trend lines, just let me know if you want me to make a video about trend line trading. Just let me know in the comment section and I'll make a video about it. So trading with trend lines, you need 2 touches to make the trend line valid. Then you wait for the 3rd touch to trade off the 3rd touch. I've heard people that say they have friends who trade the 2nd touch of a trend line, but I don't know how they do it. But if you want to trade with trend lines, you have to wait for the 3rd touch, then trade the 3rd touch. So this is the 4th touch right here. Let me just put this circle here. This was the 1st touch, right? This was the 2nd touch, right? And then this was the 3rd touch right here. So let's assume price hasn't gotten to this zone right here, this 3rd touch. So what I do is, let's say price was right here, right here. So, and I'm waiting for price to push up to give me the 3rd touch off the trend line. So I've done that on the 1 hour. So I'm gonna go down to the 15 minutes to wait for an entry, and then even on the 1 hour, I've determined that the 1 hour is bearish, right? Even in the 1 hour, price has been really bearish. Price has been making lower lows, lower highs, lower lows, breaking, making higher highs, then lower lows consecutively, lower lows, making equal highs. So I've determined that the 1 hour is in a downtrend, so I'm going to go down to the 15 minutes. Yeah, I'm going to go down to the 15 minutes, right? And then since price is right, let me just delete this. Let's say price was right here, right? I'm just going to wait. Just going to keep waiting. This was on Tuesday 28th, and this was 4 o'clock. This trade happened 4:15. So what I'm going to do is I'm just going to wait, right? I'm just going to wait for price to get here because I'm waiting for the 3rd touch of that trend line, and I want to trade off of the 3rd touch. So I'm just going to wait for price to push right in there, and then when price push right into the trend line, I'm going to wait for price action. Okay, this is where price action comes in, and then I'm going to wait for price action to see if price is actually ready to move back from that zone. So now the first piece of price action I get from this level right here is, I call this elongated highs. I call them elongated double tops, because I call them elongated double tops because traditional double tops, as everyone will teach you, they'll say it has to be like this, double tops and double bottoms has to be like this right there. The second button shouldn't close below the first button, and then for double tops they're gonna say, okay, double tops should be like this right here, and the second button the second top shouldn't close higher than the first top. So that's what they're gonna teach you guys. But then after months of backtesting, after backtesting a whole lot of months, in the market, I realized that price doesn't really do that much. So I realized that what price does much is this elongated tops and bottoms. So price was giving me an elongated double top here. This was the first high. Price pushed out, took out the first high, then dropped. Now the only reason why I'm not taking the trade from this area right here and just put here. The only reason why I'm not taking the trade from this area right here is because price hasn't touched my trend line. Okay, and since price hasn't touched my trend line, price hasn't given me the reason to get in here. So what I do is I just wait patiently, and then price touches my trend line right here. And the first piece of price action I get, right, is this long wick candle that we can possibly call a shooting star, right here. This is what I get right here. This nice bearish candle. You can see the bullish candles. Look at the wick. The wick is like half of the body, and then the second candle, this long bearish shooting star looking candle. So what I do is let me just pop up my stochastics. So I look at my stochastic right here. I get the cross. Then I would have gotten in right here. Boom. And I only risk 20 pips. I don't do more than 20 pips. So I do 20, sometimes I do 28 pips, depends on the if I have like a structure. If there is structure, I don't do more than 28 pips. I do 20 to 28 pips. That's what is written down in my trading plan. So I don't do more than that. If structure is higher than 30 pips, I just put 28 pips and leave it. If it hits it, it hits it, because it's my plan. It's a rule that I've written down. So I look back in time right here. Let's see. Yeah, I can see this high right here. Okay, this is why I have this zone already put on the chart. Yeah, I can see this former high. If I go to the 1 hour, you understand what I'm trying to say. So on the 1 hour, you guys can see that price came in here and then dropped. So I was looking for price to come there again, retest that zone and drop. Okay, so let's go back to the 15 minutes. So setting my stop loss. This is the trade right here. Setting my stop loss. If it's not more than 28 pips, then that's fine. So I'm gonna set it right here. Whew. Almost took us out, but when I wasn't on my computer when this trade actually was here, I saw it when price was already here, touching this zone right here. So I didn't really take the trade from this entry. I took the trade from right around this area. So let's say I had seen it earlier, I would have taken it like this and put in 28 pips. We almost took out right there. Price almost took us out, but it did not. So I would have gone for, this is how I trade, guys. I don't go for too much profit. I go for 2 to 1 right here. So I would have gotten out around here. But actually the way I traded this opportunity was, like I said, I saw it really late. I wasn't on my computer. So when I saw it, price was already in here, I think. In here also. I think price was in here. Price was either on this candle or this bearish candle right here. So what I did was, I saw the price in the zone I wanted it to be in, and then I took a sell from this bearish candle. And I told you guys I don't risk more than 28 pips. So in this case, I can't remember what I risked, but I know my risk was above this psychological level. And then I took a sell for a 2 to 1, and I won this trade. Beautiful trade. And this all comes down to a good analysis. If you do a good analysis, you're gonna make good profit, because you're gonna be taking good and better trades. So let's go back to the 4 hour. Let me see another trade. There's another trade that I took last week. Let's see. So just wanna look for right here. So guys, even this trade, this one right here, I took this trade last week. This trade right there, I took it last week. So let me just break down what I saw, and how I did my top down analysis to actually catch this trade. So like I said, you have to go to the 4 hour. Go to the 4 hour to determine your main trend. and then you go back to the 1 hour to determine your current trend. So I was on a 4 hour, and I already seen that price has been dropping. Price made this high, this higher low, this higher high, higher low, higher high, then lower low, then higher high, then price just dropped, made a low, made a lower high, a lower low, then price. I was waiting for price to push in because I was trading this trend line actually right here in this zone right here, because price was making higher highs and higher lows. I was expecting price to hit this trend line and push up, which it did, but it didn't last. It didn't even touch it. But price just gave us a fake out. It didn't touch it, so price broke down, and I was immediately price broke. I was waiting for price to retest this trend line so I can take a sell. Why am I taking sell? Because like I said, my main trend on the 4 hour was bearish, so I was waiting for price to retest this trend line, and so I can take a sell to the downside. So let's go down to the 1 hour. That's what I do. From the 4 hour, I go down to the 1 hour to see what the current trend is. So I come down to the 1 hour, and I see that its price actually has been choppy. If you look here, price was really choppy. It was consolidating. Then price gave this huge candle, this huge imbalance. Okay, so when I saw this huge imbalance, I already knew price was gonna drop, because if you're an SMC trader, you already know price will always fill in the candle. So when I saw this huge imbalance, I think it was news or something like that, then price dropped a bit, went back up, and I was waiting for price to get to this trend line. Why? Because on my main trend we're in a bearish move, and even on my current trend it is a bearish move. So I don't want to trade against the trend. You want to go along with the trend. So when I saw this, I was just waiting for price to get here, retest my trend line and drop. And this is what I do. So I go down to the 15 minutes to get entries, because I'm waiting for price to retest that trend line, right? So let's go. It's back here, right here. So because I've got the time frame figured out, now I have to get price action figured out if I want to win this trade. So what I do is I wait for price to retest the trend line. Like I said, let me just delete this. So prices starts to push, and then when price starts to push to my zone of interest, my interest zone, and I see kind of like a reduce in the speed, I always like this, because it's a sign showing that the like in this case now, it's a sign showing that the buyers are taking profit at that zone. You can see right here, you can see this candle, this really huge candle showing the power of the buyers. And then when it got here, it started to slow down. Then it made a double top right here, then it made an elongated double top right here. I already knew price was going to drop from this zone because of this price action right here. I already knew, okay, price was getting ready to drop, so I didn't get in here or here because price didn't touch my trend line. Price hasn't gotten to my zone of interest, so I was waiting for price to get there, and price just pushed up and it got there. And the first candle I got after price got there was this really huge bearish engulfing candle. So when I got this bearish engulfing candle, I knew price was getting ready to drop, and then I got in around here. And like I said, I don't risk more than 28 pips. So right here, just above structure there, and I go for a 2-to-1 right there. And although it took a while, it scared me a lot. Price went up, touched, dropped, went up, and then dropped and hit take profit right here. And that is how you do your top-down analysis. First thing you have to do as a trader is determine the kind of trader you are. Know this, and then you determine the time frame. The type of trader you are will determine the time frame you use, If it was a swing trader would be using, you know, the weekly time frame, then the daily time frame, and the 4 hour time frame. So he's gonna be analyzing. His main trend will be the weekly time frame. His current trend will be the daily time frame, and then his entry point will be the 4 hour or the 1 hour time frame. You see, quite different. So because I'm a day trader, I check my main trend on the 4 hour time frame, then my current trend on the 1 hour time frame, and then I take entries on the 15-minute time frame. I don't go lower. I don't take trades on the 5 minutes, because the 5 minutes for me, you know, it moves to, there's too many things going on there, so I don't. So as a scalper will be looking at probably the 1 hour or the 30 minutes as his main trend, then the 15 minutes as his current trend, and the 5 minutes, you know, he's gonna be taking entries on the 5 minutes, because it's a scalper, and he won't be, you know, in the trade for long. He just wants to make quick bucks and get out of there. So first of all, know the kind of trader you are, then the type of trader you are will determine the time frame you use, and from there you have to work on your price action. That's number two. Work on your price action. Know when to enter a trade, know when price is telling you it's getting ready to reverse, and know when price is just telling you it just wants to continue. Okay, now if you look at this trade right here, like I said, if price had continued making this bullish candle, then hitting this zone, let me just mark it up so you guys understand right here. So let's say price just continues making huge bullish candles without all these red candles and these pauses right here. Price just keeps making huge candles right here, then drops a little, then makes huge candles. I'll be quite careful right here, because price is showing me that it might just break out and continue. So I will see probably a little drop. Let's say a little drop right here. Don't know what just happened. Let's say we see a little drop right here. Then we see this. I won't be getting ready to sell right there. No. I'll wait for price to probably retest, then I can buy. So learn how to read price action, learn how to read the market, know what the market is telling you. That's the only way you can be successful as a beginner trader. Put in time, you know, devote time into learning price action. Backtest that's the best thing you can do as a forex trader. Backtest your strategy, learn to spot patterns in the market. And like I said, these elongated tops and bottoms, you know, I got to know about them from someone. It's a forex trader, and then I backtested my strategy, and I realized that they really work. So whenever I see these elongated tops and bottoms close to my zone of interest, I know that price is getting ready to reverse. So I'm like waiting for it to just give me that entry reason, and I'm in. Boom, I'm right in the market. So learn price action, and with price action and understanding time frames, this will make you a better trader, and you're gonna be making better trades and making better money. I hope you guys enjoyed this video, and I hope you guys learned one or two things. If there's anything you didn't understand, just let me know in the comment section, and I'll be making another video and teaching you guys a lot more about this. Like I said, if there's anything you don't understand, probably there's something I didn't really, elaborate, I didn't talk about well, just let me know in the comment section. I'll make another video for you guys. Thank you guys for watching this video. If you like the video, give it a thumbs up, and if you're not subscribed yet, make sure to subscribe, and also make sure to turn on post notifications so you get notified whenever I post new videos. Let's grow together, guys. Let's grow together.